Welcome, everybody, and welcome back to the Strat Talk. Thank you for joining us this Sunday for episode 5 with your hosts, myself, Adex, Zeus Trades, and OG. Abisai and Trooper, unfortunately, were not able to make it today, but of course, you know we have to keep the ball rolling. In today's episode, we have Problem Sniper of Sniper Trades. He's here to talk about his trading style and how he prepares for the market each day. Although the title of the show is called the Strat Talk, we wanted to bring other traders and offer different perspectives and tools that can possibly help you succeed in your trading. For those of you that are new to the show, I am one of the admins of AdexTrades. I started trading a little bit before the pandemic started, and I've been trading the strat for almost 2 years. One of my goals as the leader of the group is teaching the strat to as many people as possible to help others become self-sufficient traders. All right, I'll now take it over to my other admins of the panel. OG, would you like to give a little brief introduction of yourself?
Sure. What's going on, guys? I hope you guys are having a great Sunday. This is the 5th episode. I can't believe this thing is taking off. It's awesome. Yeah, just like Adex said, we really like to get other traders here as well. Nobody's hating on any other type of trading just because Adex, myself, and in the Discord and Zeus are primarily using the strat. There are other avenues to be profitable. And as long as it's working for you, then go ahead and keep doing it. But for those that are struggling and are looking for ways to be profitable, the strat's a way to be able to easily learn price action and be able to communicate what's going on. So for most of you that don't know who I am, I'm OG Trades. I've been trading for the last 13 years, and really have only been profitable when trading price action. So that's why I really enjoy coaching, mentoring, and really spreading the word of the strat to the FinTwit community here, YouTube as well. So, I'm not really going to go too much into it because I really want to hear what Problem Sniper's got to say today and give him as much time as possible. So I'll give it up to you guys.
Thank you, my man. Appreciate it. Thank you. Zeus, if you can just give a little bit brief introduction on yourself, and then, of course, we'll take it over to Problem Sniper.
Yes, sir. So good afternoon, y'all. Thank you guys for having me. This is actually my second Strat Talk, so I'm glad to be here. But I go by Zeus. I've been trading for well over 3 years now, and originally started as an investor back in 2019, but then kind of transitioned to options as I seen, the percentage gains. And then in, what was it? I'd say about a year now, I've transitioned to the strat, and I enjoy it. And it gives you such a much better view on price action. So I highly suggest a lot of people to kind of, pick up on the strat.
Thank you, my guy. Appreciate it. All right. And now on to our event. Thank you all for being here for episode 5 of the Strat Talk. Problem Sniper, I know you're here. Thank you for being here. For the listeners who don't know who you are, can you give us a little bit of background on yourself and what got you started in your trading journey? And again, thank you for being here. It's going to be a fun event.
Hey, guys. Thanks a lot for having me on. You guys can hear me right?
Yes, we can.
Okay, perfect. So, yeah, I'm a Problem Sniper. People call me by the name KT, just the abbreviation for my name. And been trading for about 10 plus years, about 11 years or so. Primarily was an investor of Apple and then Microsoft, and after that, Tesla, obviously. And started options trading about 6 to 7 years back. Profitable since 2017. I wouldn't say 2016 because of certain things that happened. I would say it was lucky, but many think that it was that being at the right place at the right time because I was in that moment. But anyway, overall, 2017 have been consistently profitable, and and something that I kind of loved, the other two panelists also said, is trade the price action. Be it strat, be it using trend lines, be it using any technique out there, Elliott wave theory, whatever there is, using that price action and using your technique along with it is what is pretty much very essential to your trading. Once you, most of the time, I generally feel like most of the techniques out there or the systems out there basically kind of tell you what to do next, right? Like they might be contradictory or whatnot, but and once something tells you something, tells you a particular price action, and you're not able to, stick to your goal, stick to your system, is where you start failing in trading. But I like that everybody actually emphasized on that price action. Strat teaches the same thing. The techniques that I use teach the same thing. And essentially, what I do is now is I'm a full-time trader, and I trade options and provide some education here and there as to how the premiums kind of move, premium movement, and recently also learning about these fancy things about gamma walls and things like that. So that's essentially what I do.
Nice. And you said you're a full-time trader. Now, I know that your parents were traders themselves. Is it safe to assume that they had an influence in you wanting to trade?
Oh, definitely, right? We come from a very humble background. My dad, being the sole breadwinner in the family, he was the one who he turned things around with trading. He had his full time job. He's a pretty big government official in India. Works for works for BDL in India. So he most of the he basically, like if you have a government job in India, you don't get paid as much. But with two kids and trying to give them quality education, you have to have a supplement income, and that's where he took up trading, and that's where he started inspiring me. And later on, once he started picking it up and teaching that to my mom, who's a housemaker, and looking at how she kind of managed her daily routine around trading, that's another inspiration step for me, where I was like, okay, you know what, anybody can go out there and trade. And if you know the right techniques, you know the right setups, and you're not emotional, and you know your risk management skills, and every single thing that I'm just mentioning about, it was not learned overnight, or someone taught me that. They were all lessons that I learned for myself, in fact. But yeah, that's how they both have such a great impact in my in my trading career, as well as throughout my journey over the last 30 years.
Wow, that is beautiful. That's great. Zeus, do you have a question?
Yes. So, what kind of trader would you describe yourself as? A flow trader, a scalper, a pattern trader, etc.?
So I usually have like a 5-point theory for every trade I kind of take. Obviously, I people just have two eyes, so we are not like looking at 100 different thousand tickers. What we are essentially looking at are a few that you usually like, right? Like I'm always looking at SPY, Apple, Tesla, Microsoft, and maybe another trade that I kind of like the previous day, or working over the weekend, and trying to figure out which chart kind of looks good. So, but over the week, when you don't have eyes on something, what gives you the what drives your attention is basically the flow. So I always have my eyes on the flow. And if I see a flow, I always usually, I have my trend lines, support resistance levels drawn on most of the charts, as much as I can. And if the price has fallen lower, or is a lot higher than where my levels are, I kind of ignore that ticket. But most of the time, it I am a very technical trader, in the sense I look at the flow, gives me a sense of, say, okay, there's something going on there. But then if I don't see that on the chart, or if I don't see the technicals of it, I'm like, okay, you know what, I'll just see what happens. So my 5-point theory is usually look for your technicals, usually the trend lines. Are they breaking up or down? Second is your flow. Third is your macro. Macro can and cannot be stock related or sector related. It's usually like, so for example, you have Walgreens that is coming out, which is on my watch list this week, where I'm looking at it. I'm totally looking at it because of this monkeypox thing, and the jabs news that might come out pretty soon in the US and the UK. And and then there's also this like if you have followed what's happening with Walgreens, you also think about like they are selling off their boots division, and like I saw the flow. Now I'm like, okay, the macro aligns, this aligns, and when I look at the technicals, it's like, okay, there's a strong hammer candle on Friday. So I'm just giving you an example from the work that I've done this week. So this is how I kind of correlate everything and try to trade. I don't I take each of these things as a data point. I'm not a complete a technical trader per se. I'm not a complete flow trader per se. Each of them is its own data point, and each of them has its own weighting.
Wow, that is beautiful. And what are the fourth and fifth points to that theory?
So the fourth and fifth point is my conviction and how much I can how many times I have played it before. Like like am I profitable playing this particular ticker over the last 10 years, 12 years, 6 years, whatnot. And the fifth point is how the vibe in my Discord community.
Wow, that's really beautiful. I actually just wrote those 5 points down right now because when I'm looking at it, it just makes sense. Like you have your technical analysis, and we trade strat. So we're looking for actionable signals on like the particular time frames, whether it's the weekly time frame or the monthly time frame. We want to see like where institutions are possibly their money. If we're getting like a hammer candle, just like how you stated. And I'm actually glad you talked about Walgreens because I know a lot of us and a lot of strat traders are particularly looking at XLV this week, considering that you have those monkeypox news and you have possibly like a two up. You can get a two up continuation in XLV. So I know we're looking in healthcare. So that's really dope that you did talk about that. And you mentioned how when it comes to your macro economics, you're trying to remain unbiased. Where do you get that information, and where do you look for that information, and how do you remain unbiased if you see that the news are particularly swaying one way?
Yeah, so a couple of things that I kind of do. Like I know a lot of people who talk about swaps. They talk about 10-year yield. They talk about this. Things like that. So something that you have to keep in mind is macroeconomics take time, and I am a trader who is a quick in and out, right? Like I make my money today and I'm out, and after that, or whatever happens to Walgreens, I really don't care. So you have to keep that time frame in mind, and like uh, something that I kind of do is also like, for example, I was just talking to you about Walgreens, where they have been talking about their boots division, right? Selling off their boots division. I wrote it down, and I just have that memory, like where I keep that in my mind, and it just keeps going and going. And once I see the flow, and there are so many technical things aligning. Like for example, you just talked about XLV. XLV had an inside week, I guess, right? So that's where I'm like, okay, there's some compression here. There's these components here. Now I know that macro like this again. They said their boots division would be sold about a few months back, and why am I speculating about it right now? Because the technicals are also aligning with it. So I just happen to write it down, right? Like. And once I write it down, I have a very good photogenic memory. So once I write it down, I look at it a couple of days, and then I just happen to remember it on the back of my head. So once things kind of align, and like I'm seeing the macroeconomics unfold, is when I try to get in. I don't predict any macroeconomics at all. Like that is a strict no-no for an options trader like me, because if someone says, oh, we are going up because of short squeeze, I'm like, okay, let it happen, then I'll get in, because I really don't care of where things are going, as long as I can get the middle chunk of the meat. I don't care about the tail ends. I don't want to catch the bottom or the top. I just need the middle chunk. So like that's where I'm like, like I let the macroeconomics unfold. I let the technicals or the price action drive the macroeconomic bias that I have. If I don't see that, I'm like, let it happen. Then we'll figure it out.
Yeah. Not to cut you off, because what you're saying is what I feel like traders that have traded as long as we have understand, that you're not trying to predict anything. you're not, it feels good when you can catch a bottom, and it feels good when you can exit at the top, or vice versa. If you're shorting, you catch the top and you sell the very bottom. Of course that feels good and it really pads your ego, but really where most profitable traders that have traded for a while is when everything aligns and you're not worried about catching the entire move. You just want to get in, get your money, get out, look for the next setup, look for the next play. So I really do enjoy what you just said, and the fact that people that may be listening are thinking that you're looking for a specific confluence, because confluence is such a buzzword, but really it's not so much confluence. It's almost just, is the setup there and does it make sense? And the macroeconomics that you're talking about isn't necessarily like news. You're looking at the sentiment as far as what is the sector looking like? What is the global economics looking like? What is the theme that is going on right now as we're trading? And there's so many people that are thinking they're going to catch the bottom here and they're going to buy the dip and they're going to do this and they're going to do that and they're going to be millionaires because they're going to catch the reversal to go back into this bull market. But if you're following the trend and you're following the sentiment, we're in a downtrend. And as you've said, that you're not looking to predict. We're just looking to trade what is in front of us, just like the price action, just like the news, just like economics, all of that. We're not trying to predict. And so I really love that about what you're saying. So, man, keep it up.
So, going off of that, we've noticed you do a lot of daily predictions for the entire week of the stock market. What are things that you consider before making your watch list?
So the daily prediction, that post that I make is purely price action based on previous years. So I take all the data from 1990, the year that I was born, and I just say, okay, let me see how this day kind of worked out for the last 30 years. And if it is green, if it has been green, I post it's a green. And interestingly enough, I don't post the complete list of it, in the sense that, like, if you I can give it to, like, I post it at the end of the day on my Instagram or whatnot. But like, there's a probability associated with each day that I post. Yeah, in Twitter I just post like a binary green or red, but like, in fact, it's basically a probability. So if you look at something that I kind of have been seeing for the past 2.5 months, is every red day that I have predicted with probably about like, I basically predict what is the probability of a particular day being green. And if it's under 50, I post it as a red. If it's greater than 50, I post it as a green. And every day that I've predicted to be red has in fact hit pretty well for the last 2.5 months. That's where I was like, oh no, okay, you know what? We are definitely in a bear market territory. We are going to trend down. Any bounces are going to be sell exit points for all these big hedge funds or whatnot. So essentially, that prediction is to answer that chart. It's basically a probability of how much, like, is it going to be a green day or a red day based on your previous price actions for that particular day since the year I was born. So that's one. And secondly, how do I make my watch list? I look for compression patterns on my watch, or to add to my watch list. So I usually make a, 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 a a four watch list, where like, I have one as a spotlight of the week, spotlight of the week two, and then I have a trend setup for the week, where like, you have something trending, like, for example, for this week I'm looking at security names like CrowdStrike, ZS. ZS has earnings also, Palo Alto Networks, which basically had very good earnings, and the sector itself is kind of showing some strength. So it's a trending sector. So I kind of like CrowdStrike right now, because you have that compression pattern, and now you basically, Strat is also something very similar. You talk about compressions and expansions, right? We did see that compression in CrowdStrike. Now we have an inside week, and now if it can break, we have a 15-point move up or down. So I'm essentially drawing levels right there and saying, okay, you know what, like, let this level break, I'll pick up puts. Let this level break, I'll pick up calls, kind of thing. So that's how I kind of come up with a trend setup of the week, and then I also have like a technical setup of the week. We talked about Walgreens just now. I was looking into Spotify, which has a very nice compression, which basically is another spotlight of the week. And like there are different things that that I keep looking for, and majorly I'm a momentum trader, so I am looking for the compression patterns where a market always moves like a heartbeat, right? Like it compresses and expands. So when there is that compression and then I'm seeing a momentum break or a momentum to either direction, it really doesn't matter which direction the stock moves. As long as it moves, I tend to make money. So I'm waiting for those levels to break, and that's how I kind of prepare my watch list. Um, Most of the time, I am trading big tech, like what I just talked about, Walgreens, Walmart, or CrowdStrike. These setups that I usually try to swing, majorly because their IV is so low, and like when they move, they really move, and you can make a lot of money. Like if Walmart, when Walmart moves, you can make many people really think that. Tesla, Apple, Microsoft, Amazon, Google. These are the moves that can be life changing. But no, the most of the life changing moves that I had, I mean, account changing moves that I had were on Cisco, Walmart, Target, Intel, Baba, etc. Like like they when they move, they really move, and you can make like 500, 700,000% pretty easily, because their IV is usually is usually very low, and you want to pick up some swings on those. On a day-to-day basis, I'm always looking out for Apple, Tesla, Microsoft, Amazon, and Google, where like you catch the trend, you are up 30-50%. Like usually, I just trade about 30 to 60 minutes from the start of the day, and I'm done when I hit like 3K to 6K. I just try to hit that 3K to 6K mark 10 times every month. That's my goal. $500,000 a year. I'm pretty comfortable with it. So that. So for trading like that, I tend to pick up stocks like Apple, Microsoft, Tesla, Google, Amazon, etc. These are always on my watch list, and I'll always play them intraday or for scalping, or like day trading and things like that. And the money, if I make anything more than 6K, that goes into the swing. And if that swing goes to zero, I really don't care, because I'm up already, and the profits are what go into the swing, and I can stay very unemotional with my positions.
Wow, I think you really nailed it on the spot. And especially when you talked about how like some traders, they just focus on the big tech names such as Apple, Tesla, Microsoft, Amazon, things like that. But they don't look technically. They don't look at these other names such as Walmart. They're not looking at these other names in these other sectors. Like for example, oil. Right? You could have swung oil. You could have swung Chevron, Zom. You could have swung Valero. And they think that because they're not moving or they don't have a high ATR of that day, but really it's the bigger move that you want, because if you look at it, you will see that in the last month oil has been moving and things like that. So I think you really nailed it on the spot, that like you don't have to focus on those tickers that have the high ATR, like the Tesla, the Amazons, because for example, what if what if XLK in tech is like red, but you want to place those stocks to the long side? Right? You can be looking at these other sectors that can actually be giving you better gains. So, wow, I think you really did nail it on the spot. Thank you for that. I appreciate it. And following up on that, what would you say has more weight then? Because you talked about in your 5-step analysis that you look at the technical analysis first and then you look at the fundamental analysis. Would you therefore say that technicals outweigh fundamentals, or no?
100%. For my trading style, technicals outweigh fundamentals any day. Like if you're saying Amazon is fundamentally wrong with overhiring and things like that, I'll just say technically we are in that compression reversal pattern. So I'll wait for this break, and I'll play to the upside. People won't like it, but like with the split news coming up, with the split vote coming up, the split coming up and things like that. Fundamentals for my style of trading have very, very little weight, because I'm not buying leaps, or I'm not buying 6 months out or 8 months out calls. I'm in and I'm out before you know it. I'm out because I'm just looking for that intraday move. I'm never looking out for this is what might happen with Amazon, and this is where I will put my money in to make money. That's not my style. So fundamentals have a very low weighting. It's usually technicals first, probably take about 60% of it, because I need technicals to be identified first before I look into the flow. And this can kind of switch intraday if I'm not feeling right or something like that with the homework that I've done. I just switch to flow, and this. You can do that once you're like a experienced trader, but initially you always want to do your homework, stick to one or two stocks on a weekly basis or a daily basis, and just trade it. Like for example, like every morning, this is a routine that I kind of do. I always pick and choose two stocks. One can be Tesla or Amazon or Microsoft or whatever that is, a big tech name, and the other one I usually take a low beta name and try to figure it out. But last week and the week before, it's been so volatile. Why even think about low beta stocks? So I kind of picked up on Tesla every single day, Facebook every single day. Like I just keep beating the stock down until it's dead. Like in the sense that upside or downside, it really doesn't matter. As long as it keeps giving me money, I just keep beating it and making my money. So that's essentially what I kind of do. Like I just hate looking at 100 different tickers. Like even after I started my Discord, we have people who keep talking about, oh, what about this, what about that. I'm like, why even concentrate on that? I know other people are making money, but your focus should be on your strength. You already did your homework. Respect yourself. Make sure you make money on the time you spent on researching something. So yeah, technicals definitely 60%, flow about I would say 25 to 30%, and fundamentals take a very 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 low uh, uh, you know uh, weighting on in my trading, probably about 3 to 5%.
Wow, that's so beautiful. You talked about how technicals outweigh fundamentals, and that's what you're relying on. And that's what me, OG, Zeus, and like all of us, and especially all of us strat traders, we always like to preach that price action will always precede the news. The news will always precede retail. Once you know that institutions are already going to be buying something up before the news comes out, you will see it in the chart. You will see it in price action. You will see the two up on the week. They get in before everybody else. Like that's what we always try to preach, and that's why we try to say, like, don't rely on the news. Don't listen to CNBC. Don't listen to Jim Cramer because he's just an inverse ETF. Like we were saying, like institutions are doing the opposite, and so that's just it's just beautiful that you're saying it, and also the fact that you're reiterating to do your homework. I always preach, and a lot of us always preach, that you make your money by doing your homework, right? It's not you just waking up in the morning and saying, okay, what stocks are we going to play today? No, which stocks did you chart out the night before? Which stocks did you chart out the weekend before? Because those are the ones that are going to pay, because those are the ones that you spent time looking at those setups and seeing the potential that they can give you. So thank you and shout out to you for reiterating the fact that these are the things that's important, that's actually going to make you successful as a trader. Thank you. Zeus, do you have a follow-up?
So I have a question. So I seen you were primarily a penny trader prior to options. What helped you, or gave you that transition to mainly options now?
Oh, I was not a penny trader for long. I lost money right when actually the second trade I took, I lost money. The main reason why I did not like it is by profession I'm a machine learning engineer, and I love data. And penny stocks, something that has irritated me when I start, like I just used to love making money. So I was experimenting on certain things, but penny stocks was not the way for me because like the price action was weird. I couldn't get myself to say, okay, you know what, this happened this time, so this can happen again when it happens again. Right now, if you I'll go back to WBA, right? I'll go back to Walgreens theory. Like if you look at what happened on Wednesday, there was a huge sell-off, and then you have Thursday and Friday, and both Thursday and Friday, you see that you have long lower wicks. Why is that? Usually is because you have buyers stepping in and saying, okay, you know what, this is a value zone for WBA, and I'm going to go buy the dip here because again, there can be news, and because of the flow and things like that, there can be news too, and someone always knows something. And but that's a pattern that happens all the time, right? Like you see hammer sticks like that, and the next week you see a news, and then you're like, okay, you know what, this happened to me this time, so next time some of the stock does the same thing, I kind of know what to do. So you see that price action, you see those candlestick patterns, you see the technicals, you see there are things that keep repeating themselves, which are reproducible. But with penny stocks, that was not the case, and I hated it, and did not pursue any longer with it.
So since penny stocks wasn't as lucrative because you couldn't quite gauge the magnitude, you couldn't quite gauge to see where patterns can repeat themselves. When you transition to options and you start to become profitable, are there any other option strategies that you have used that are more lucrative than just naked calls and puts? Because I've used many different options trades. Selling options is one of them that is a little safer for options as well. And if you kind of know where price is going, you could sell a put and just collect the premium and let everybody else kind of gamble. But is there any other option strategies that you've used?
I primarily do the naked calls and naked puts, but something that I have been using since last year, to an extent, right? Like my account kind of became 15x in 2020. Like I know many people kind of make fun of me, like many people in the sense, my dad, my uncle, and all these people, they make fun of me because I'm a millionaire who was made in 2020, right? Because of how things kind of worked out, right? So and it's not a great thing per se for them. It's a joke because there was a lot of ease that was in 2020. You catch anything, you're basically making money. So but then come 2021 and specifically in 2022, some of the trade ideas that I kind of post are selling credit calls and credit puts. What happens with credit calls and credit puts? Spreads. I'm sorry, I missed the important word. Credit call spreads and credit put spreads. I really like that because on the charts you can clearly say, this is a balance zone, right? Like this is a balance node, or this is a volume node, or this is you have price to volume levels and things like that. And you definitely can see, unless and until there's a crazy amount of momentum or something like tomorrow Powell coming and say, okay, QE is back on, you tend to move all the way up till there and flag or something, things like that kind of happen, right? So I really like selling credit call spreads and credit put spreads around those regions. So for example, what I kind of did, what I kind of like with Tesla is 630 is a very 625 is a huge level on Tesla. So something that I was telling some of my friends was, sell 625 put because it's expensive, and buy the 620 put. So that way you are collecting that actually 600 put buy and 625 put sell. You're collecting that 25 points. Basically, it was around $3 or so, and or whatnot. And then when you're breaking under, or you're breaking below 630 or so, you just can cut it off, and your risk is minimized that way. I don't advise selling naked calls, naked puts, because you might get caught up in a wrong way, in a sense that tomorrow Putin says, okay, this is the end of war, and we are gapping up 3 to 4%. Every stock kind of rallies, and you sell covered calls. You sell calls. You have to go buy those stock and give someone who has exercised it or whatnot. So I kind of despise on selling naked calls and naked puts, but credit put spreads and credit call spreads is something that will be very profitable in 2022 and 2023, I feel.
Yeah, that's kind of my sentiment there as well, that getting those credit spreads is what's going to help build some wealth here, especially towards the end of this year and going into 2023. And it is less risky, especially those that are just hopping into the market now. But it does take time to understand what you're getting yourself into. So anybody that's heard this information that Problem Snipers also talked about, make sure that you're educating yourself and finding those resources that you really understand the different types of options that are out there, so you can protect your downside risk, and you can be your own little mini hedge fund where you can assume where a directional trade could take you. Of course, we don't want to assume anything. We don't want to try and predict, but it's still going to minimize the risk end, and you can still make quite a bit of money collecting that premium.
And sticking to the topic of collecting premium, Problem Sniper, you talked about in the beginning that you trade based off of the premiums. What do you mean by that? And can you discuss how you determine when premiums are pricing in a move for the underlying stock?
Oh, yeah, definitely. So this is something that I kind of started doing in 2019, did that in 2020, but it really didn't matter because everything was going up. But now it's coming back in handy. Basically, what I did in 2019 was I used to buy a single contract on every stock, and I used to buy the strike price based off the levels that I have. So if I say, for example, Apple 138 is a huge level, I buy the 138 put and see how it's moving, right? So when there's some bounce in the Apple stock, like let's say it's trading at 140 and it goes to 141, and your delta move on. I don't know how many are familiar with all the Greeks on the option itself, but I don't look at all of them. I recently started looking at gamma, but delta is what I'm always focusing on, basically because I want to understand the premium movement. So what essentially delta gives you is for a point move in a stock, how much can a particular option price can move is what delta gives you. I know there's theta, there's gamma, and all that. I don't really care about theta because I'm a momentum trader. So anyway, so once you have that one point bounce in Apple, I want to see how they have inflated or deflated the put premium. So what I kind of do with that unusual activity is now I kind of have a script also where I see if they are giving me that complete delta move. So now that once I bought that put and I kind of know, okay, they are not really inflating the premiums here or deflating the premiums here, even with the point bounce. I know that it's a dead cat bounce. And usually I would say about 75 to 80% of the time when I see a delta move greater than the normal delta move, when a particular stock moves in the right direction of your contract, be it put or call, I have seen that the stock really craters and craters or jumps in that direction, and you can make a 50% plus return on that contract. This is something that I have observed since about 3 to 4 years right now. And also something that we have caught on Facebook, for example, last week. I kind of can give you the summary because I go over these logs and do a nice recap of all my trades and things. And the reason why I bought Facebook back then is I was trying to trade the 205 call when Facebook was somewhere around 197, and I was like, no, like the premium on that was $2.40, and Facebook fell to 195. The delta move had to be much greater, and I was watching that premium go from $2.40 to $2.32 for a two point drop in the opposite direction. And then I was like, okay, you know what, this they are not deflating these calls. There is some bid out there that they know what's going to happen. And then we bought the 205 call, and the next 5 minutes it just jumped to 80% plus. Like literally in 5 minutes it just jumped to 80%. But it's all about having the right eye to watch the right contract, knowing your levels, and like once you know your level, you kind of know which contract to look for, and that's where you focus and see how the premium is moving based on the underlying delta move. And once you get the feel, it's I would say it's mostly a feel of it. I do want to explain it in a much better sense with a technical reason behind it as to why that happens. I really don't know what happens on the floor, so I don't know how they are pricing those premiums. But then that's how I kind of gauge the premiums, and I try to understand how we are moving up. Are we going to move up or down? And the same thing goes with my stop losses too. If I bought that Facebook contract again, I bought that Facebook contract at $2.40, went up 80% in like 5 minutes. But then if it really did deflate to like two ten or $2 in the next 5 minutes, I would have just cut it off and said, okay, you know what, my stop loss hit. They are now deflating the premiums. It means it was a late reaction or whatnot, and I just get out. So that's essentially what it is.
Now, was this something that you figured out yourself, or did you have any prior knowledge to like looking at premium pricing of options contract? And the reason why I asked that is because that's something I'm always looking at the options chain, and I'm always looking at the delta to theta ratio. We of course want or depending on the type of trader that you are, you obviously want to play that has a higher delta and less of a theta. So if for a trader who is normally looking at the options chain, is there a way for them to start to learn about how to look at how premiums price and possibly get a play based on that?
Yes. So the main levels are the levels are what tell me which premium to look. I don't look at the entire options chain, by the way. It's too much information overload. My brain just farts. So what I kind of do is, so for example, 205 is a major level on Facebook. 195 is a major level on Facebook on a daily time frame for me. So now I'm essentially looking at one. So if Facebook is trading at around 198 to 200, I'm like looking at 195 put and 205 call, and that's about it. I don't look at anything else. So now, based on the movement and the price action, now I'm kind of looking at the delta and saying, okay, you know what? Like I'm not seeing that delta move on Facebook, and like I've said before, like I'm a machine learning engineer too, so I kind of collected this data over time, and I started my own Python script that I kind of run to figure out if there's an unusual delta move. Again, no system is perfect, so you have to respect your stop losses, and these premium moves are pretty visible most of the time. When you have a sense of what the delta move should be for every point or a 2-point pop in a particular underlying, that's where you have to understand the stock much better. Like you have to know the personality of the stock. That's why I kind of say, I'm only when I'm day trading, I'm only trading about 5 to 6 names. I'm not going after 100 different names. When I'm swing trading, it's fine. It's totally different ball game, because I know I don't have to watch them every single minute, and the money that I kind of put in there is usually from the profits that I make on a day-to-day basis. So but when you're looking at the premiums, Robinhood is one of the best apps for it. Like I feel where like you can add the option onto the watch list. You can do that on Thinkorswim also with the graphs and everything. But to get a feel of it, you can just start with Robinhood. Add things to the watch list. Like for example, if we start in red on Monday, uh, uh, have the 2200 call on Amazon on the watch list. See how they are deflating or inflating it, because 2200 is a pretty decent level on Amazon to break to see any upside to it, right? So see how they are inflating or deflating it. Like for example, we open -1% on Amazon, and that contract is down about uh, 20 to 25%. That's a red flag that Amazon is not going to go much lower. But if they're opening at -40, -50%, that means it can. They are pricing it right, and things like that. So you tend to get once you understand your personality and the personality of the stock itself, and you and the stock align like a nice married couple or whatnot. That's when you get the feel of the premiums. Back in 2019, this is something that I kind of used to do. I used to plot the premiums and see how the delta, how the price action is with respect to the delta, and that's how I kind of created my script too, where I'm like, if there's delta move of X, and I'm getting 2X worth of price movement. This usually happens in the best stock to play premiums is Tesla. Like if you want to start looking at premiums and try to understand how they are moving, Tesla is the #1 stock for it. But anyway, so how I built my script was, I just draw the premiums on one on the x-axis, and then I also draw the delta on the other side and see if I'm getting the complete delta move or not, and if I'm getting any unusual, like 1.5x or and right now I kind of look at 1.25x because of how the stock market is with the VIX. You have to adjust that unusual activity based on the VIX also. That's something that I'm learning in 2022. It's all part of learning, but anyway, but you have to like graph it out, or try to get a feel of it based on the stock's personality.
That's beautiful. Thank you for all that information. I'm definitely going to be looking into premium pricing because I definitely want to get a feel for that to add to my arsenal and my tool belt. And so, since you are a momentum trader, which time frame are you looking at, or which time frame are you paying attention to the most?
The 5-minute. This is something that this is an open secret, right? Like it's always the 5-minute, it's always the level, and it's always the volume. MACD, RSI, all that crap, I don't look at it because I feel they're all lagging indicators and they take time. The only real-time indicator for me is volume, and I pay extra for getting real-time volume data as well. So so very simple for new traders who come into my Discord. Like this is something that I kind of show them, right? Like you are having increasing volume on the 5-minute bars, and the stock is moving up. That means the stock is bound to move higher and higher once it flags. So when you're flagging, you can position yourself on a bi-weekly time frame and still make money, about 10 to 20% easy returns. When a stock is moving lower with the tapering off volume, that means we are close to finding that intraday base where we will see that flagging pattern, and unless and until there is reversal volume, don't even touch that stock. So things like these, right? Like there are very, very simple techniques that you can understand with volume on a 5-minute chart, on an intraday scalping / day trading kind of trend. This is something that I kind of do. Always the 5-minute chart. I'm not looking out for anything else. Looking for the intraday or swings on the weekly time frame or a bi-weekly time frame, I'm looking at the 65-minute chart, which I kind of love, especially on SPY, because of how I can identify short-term patterns for my day trading, scalp trading kind of scenarios. I can also find certain setups, right? Like trend lines or whatnot. Play the breakout, and I'm done in like an hour or two. Like I've been saying, like I basically trade for 30 to 60 minutes in a day. That's mostly it. And after that, I'm just playing around with my dog or doing whatever I want to do. I'm usually done by 7:30 ish on the day on my time. So yeah, I mean that's those are my time frames that I kind of look for.
I'm so glad you actually mentioned the 65-minute time frame, because we also have one of the admins for our group, Master Wu. He actually got me into the 65-minute time frame, and at first when he taught me about it, I was like, there's no way I'm going to be looking at this. Why the hell would I look at a 65-minute time frame? And then I started to notice patterns, and then especially if you're looking at these strat actionable signals, you can see a lot of plays actually formulating and materializing on these specific time frames. Like he mentioned the 130. If you actually want to be honest, one of the trades that I took on Friday, AMD and Nvidia short, the reason why I got into the trade was because we had a 322 rev on the 130-minute time frame on Thursday that just triggered, and that's why we were able to. We got in Thursday 5 minutes before the close, and obviously it went well. But those the 65-minute time frame, that is something that I want. I want traders to actually look at it and see, what can you possibly see? How does your mind process that time frame? And so, with that being said, why do you particularly use the 65-minute time frame rather than the hourly?
Keeping it very simple, right? Like as a data engineer, you have to you always want full data, and a 65-minute time frame gives you 6 nice candles on the day, which is full data. But with an hourly candle, you the last candle is basically incomplete. It's not complete data, and I don't know how to weigh that candle uh, uh, given if it's a hammer, let's say, but that's just half data that I have. It's not the complete hourly data. So how do I weigh it? I can't really give it as much importance as the previous candles, because it's incomplete data. It's just 30 minutes. So that's the one of the major reason why I kind of go with 65-minute. And then the chart just feels cleaner and at home for me on the 65-minute. It's just a comfort zone, I feel. That's mostly it.
That's beautiful. That's beautiful.
So, what are some major guidelines that you would tell for newer traders to follow?
Major guidelines, as in like with options trading, you mean?
Yes, sir, like trading rules.
Okay. For newer traders, I would say size smaller, try to understand what's happening. I like play the side the market is moving. Yeah, like it's all based on the time frame and the goals, right? Like this is something that I keep telling everybody who pings me on Twitter too. Like, I want to join your community, and then I'm like, how long have you been trading? And they're like, okay, it's been like 2 months or 3 months or whatnot. I'm like, okay, try to assess your goals. Try to see how you can pave your journey towards that goal, right? Like that's essentially that essentially is what motivates you or drives you every morning to wake up and do your homework and execute your plans accordingly. So I like these are things that I've that have experienced after I started my Discord. Like there's this woman who basically makes about $30 an hour, and she has a kid, and now she stopped going to work because of COVID and whatnot. But her perspective was very clear. When she was talking to me, she was like, you know what, I make X per day. That's if I can make half of that, I can help my husband by taking care of my kid. So and she was like, like when she started about 8.5 months back, uh, that's the X by two is what she started making pretty consistently, I would say. Like just following what we were talking about on an intraday basis. Like she only concentrates on one single stock and things like that. If it's not working out, she just doesn't care. But now in 2022, now she's in a bear market. She's making pretty good, and in Feb or something, like I did have the experience of talking to her directly on the phone, and she was pretty elated because she made more than her husband was making that month. So like you should have a goal in mind, like always have a goal in mind, and try to pave the journey towards that goal. Always try to enjoy that journey towards the goal. So that's something that I absolutely tell every trader that's starting off. Every new trader, first do that, and then based on that you can then assess your risk management, right? Like if you want to make $100 a day, you really don't have to put in 10,000 every trade. You just have to do like probably about 500, 600, and like scalp here and there, wait for your perfect setup, and you should be good, right? And then that's where you can formulate your risk management and things like that based on your account size and stuff, and your goal, obviously. And then and the third and the last thing is uh, trying to manage your emotions based on what's happening on an intraday basis. So many people on Twitter, like this is something that I kind of realized, and I experimented on my Twitter as well. I put in I did this last December, I think, where I put a bullish comment and then I put a bearish comment. I took a union of both, and I did not get any I did not have any intersection of users, which is pretty crazy because like it's all based on bias. So if you think I'm on your side, you just go like the post. If you think I'm not on your side, you just ignore it. That should not be the case with anybody at all. Like your position should not be dictating your bias or your mindset or your trading. So always try to think outside the box and try to figure it out. And something else that I would also say is always journal your trades. Starting the first year of trading, I realized very quickly that once I have a red day, the next day is usually going to be deeper red. So I stopped trading for a week. That's how I kind of realized, like I was so focused on my bias that even if the stock was moving in the opposite direction, I would be like, this will come down, and I used to marry my positions and whatnot. And and you have to understand your mental aspect also. Like for example, I was telling you I just trade for 30 to 90 60 minutes in a day. That's because over the time of my journaling, I have seen that I was always profitable the first 45 to 60 minutes in the day, and after that I hit some losing trades here and there. So I tend to not trade after that first 60 minutes unless and until I see a solid setup. And even if I do, I'm usually trading with much lesser uh, capital. Like for example, like in the first 60 minutes, I trade with 10k positions. And after that, it's usually a lotto or a smaller half size position for 5k, so that I can manage my emotions and my risk and my and whatnot. So that's essentially something that is very important. Knowing your when your brain is active and is capable of comprehending the trades and staying unemotional and being proactive to think or proactive to price action. That's something else. And then lastly, I think have a good mentor, right? Like there's a lot of free discords out there. There's a lot of good stuff out there. Like TSDR is on as well. Like I adore that. I adore him too. Like he's a pretty good trader. I listen to him on Spaces with Stock Talk. There are awesome traders out there. And don't fall for those pump and dumps. If someone is is showing you 1,000% gain on something, just don't fall for it, because they might actually bought a contract for $1 and it might have gone for $1 it might have gone to $10, which is basically 0.01 cents to like zero point 0.1, and they made like what $9 on that. Like you really don't know. So and you really and nobody really posts their losses, right? Like tell me some person who says, oh, I lost so much, I'm very happy to post this losses here. Nobody really does that. So you don't know the flip side of the coin, and don't FOMO into other people's success. That's something that I keep telling day in and day out. Don't just fall for other people's success. Like pave your own path, pave your own success. You're unique, so you have your own superpowers to do it.
Wow, this is all wonderful. Thank you. And you mentioning the fact that journaling your trades and understanding who you are as a trader, like that is so important. And like a lot of traders want to bypass it, but you can't because I know I speak for a lot of people here that as soon as you probably started journaling your trades, you started to realize how you were as a trader. You started to realize how you can adapt to market situations. Me in particular, a lot of my members know this is that like I love swinging. And the reason why I love swinging is because my mental fortitude, like it could actually handle it, and I'm not literally I don't have anxiety when it comes to those intraday movements when I'm in like a weekly contract. And so I noticed with myself when it came to journaling trades that hey, your mind can handle when you buy time. But when it comes to you buying weekly contracts, you could get shaken out of your position. You could actually get taken out during a TTO or things like that. So journaling your trades and actually understanding how you are as a trader will get you a long way in this market. So thank you for mentioning that. Appreciate it.
And to touch on what you were saying, you wouldn't really trade intraday because you tend to lose money after journaling your trades. So, what creates a high probability trade intraday for you?
Usually a flagging pattern. At the open, it's usually the level that I'm looking at. Like, for example, I was telling you about the Facebook trade. I'm looking at the 198 level and then the 200 level. I'm looking at 205 call on the premium. And if the 198 is holding and, like I'm able to see that there are buyers lower wicks longer than longer with volume. And there is like intraday, uh, one of my best of the best setups is increasing volume with price going higher. That just tells you that there can be a lot more move after a flag at a level. So that's something that I kind of work off intraday, and one of my best setups that I take probably after the first 90 minutes. But otherwise, I'm not even looking at stuff. Something that I want to touch base on, which Alex also mentioned about journaling. I've been through a vicious cycle in journaling when I started my trading journey. This vicious cycle, I think I have seen that happen with. I mean, I wouldn't say every trader, but many traders that I've been talking to in my Discord too. Like the vicious cycle is basically because of over trading, in the sense that every day if you're taking like 3, 5, 10, 15 trades, just because someone told you something about it, or you go in and out, hit your stop loss, and then go move to the next one, hit your stop loss, move to the next one, hit your stop loss, and once you start your journaling, you're like so tired that your mental capacity is so drained that you don't want to journal anymore, because like you're seeing red, 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 then a small green, then a red, 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 small green, and things like that. So don't fall into that vicious cycle where you're like your mind is not active enough to even journal. So make sure you don't overtrade. Something for a new trader, my recommendation is probably take one trade and be done with it. If it's a losing trade or a winning trade, if you had made profits, like for example, this is what I kind of do. I have X in my mind. If I make X plus 2, I'm putting that 2 into some other trade, and I just try to play around with it. If you have a losing trade, the next trade I usually size smaller and try to make up for the lost money, because the next trade I try to cover up the money that I've lost. That's my mentality of trading too. Like that's something that I've developed over time. And if I lose the second one, I'm not trading that day anymore because I know my mind is not at the right place. So this is something that I kind of tell every new trader too. Like, go after one or two trades. Don't do more than that, because once you start journaling, you'll be exhausted and you do not want to journal. Like it's a human psychology, right? Like who wants to journal 100 different things where you have made money, or where you have already made money? You don't really you're so excited that you really don't want to journal, or you lost a lot of money, now you're so depressed that you really don't want to journal. So it's a it works both ways, and you won't be able to find that niche that is successful for your psychology. So something that I've seen with many people over the last 1.5 years with sniper trades, and something that I have realized myself when I started trading.
Wow, thank you. I know everything that you just said is going to be useful for all these traders. I know I'm taking it all in. I'm writing all these things down. So thank you. Thank you for all this information that you're giving. I know it's been over an hour, and I do know it's a Sunday. People have things to do. Well, do you have time for some of the audience members to ask some questions, or do you have to go?
I can be here. It's about 1:30 a.m. right now, so I have nothing to do.
Wow. Thank you. Thank you. I appreciate that. All right. We do have Fatima. I will bring you in as a speaker. And what's up, Fatima? How are you doing?
Hey,
And feel free to ask your question.
hi, Problem Sniper. So I was actually listening to the space, and I know that you were saying that your best time of the day for trading is typically the first hour in the morning, right? So do you typically set a profit margin for yourself when you're in that trade, or a stop loss within that time frame, or do you typically, if you're convicted, let that trade run throughout the day and not just take additional trades? Because I wanted to get more clarity on that.
That's a very good question, actually. So I kind of work with the scale out mechanism. So how I kind of do is, when I'm in a trade, once it goes to 20%, I'm always having a mental stop loss at break even. I'm talking about a mental stop loss, not a physical stop loss, this specifically in options, because your stops can get taken off very fast, and then you'll see the bounce. So anyway, once I see a 20%, I'm putting a mental stop loss at break even. And I'm usually selling my 1/4 to half my contracts at 25 to 30%. I'm usually out by then. And then once I'm out, I'm having my mental stop loss at 10%. And then, as it goes higher and higher, I start scaling out. So scaling out is probably the best solution that I have. The reason is, I like it's based on my mental capacity to hold on to a contract, because once I start seeing about 3k to 5k loss, my mental capacity is like, okay, you know what, I'm done for the day. But the same thing goes with the profits too, right? I can't really hold on to a position just seeing a 10k plus 10k profit. So what I kind of do is I slowly size down as it keeps going up, and my scaling out technique is around 25%, 25 to 30%, and then I'm out at 50%, some at 75 to 80%, and then leave runners for 100% with stop losses along the way, the same way. 30% I'm having a mental stop loss at 0, 50% a mental stop loss at 30%, 70 to 80% a mental stop loss at 50%, and my runners, I just let them go with the mental stop loss at 50%. Sometimes I just swing them too, because it really doesn't matter. I'm not losing much. And through this entire scaling process, usually my average return for most of these contracts that I take is about 60%. So a 10k position, I'm usually making $6,000, which is close to which is a little above my daily goal that I love to hit. So my goal on a yearly time frame is make $500,000. So divided by the number of trading days, and divide the number of trading days by half, because I'm only banking on half those trading days being nice towards me, other half being nice towards someone else. So that's essentially how I break down my trades and how I scale in and scale out of my positions. Hope that helps.
Got it. Yes, very helpful. Thank you. I really appreciate that. Thank you, Adex.
Of course. Thank you for that question. A question that I have for you, Problem Sniper. You do mention market eternals often. Could you briefly cover a few of them and why they're important, like tick and other ones like that?
Yeah, definitely. So the reason why I kind of like the tick and the volume difference is, so um, so usually S&P and Nasdaq and things like that, these are market cap weighted indices, right? So if Apple is cratering 10%, but the rest of them are moving nicely, like, for example, this happened on Tuesday, where we had Snow, we had Upstart, we had all these growth names moving higher. But what was dragging the indices down? It was basically Apple, Microsoft, Apple and Microsoft, technically, right? Like this was last week, Tuesday. So once you look at the internals, it kind of gives you a sense of, okay, you know what, the indices are red, but then your market internals are saying that, advanced decline ratio, volume is increasing, or, we are seeing some other moves. That's where you start to drift away from weaker sectors to say, okay, the entirety of the market is basically bullish, but then the S&P and Nasdaq are basically down because of the heavyweights that constitute the major portion of it. So that's where it kind of helps you. And then and it's also the sentiment, right? Like you kind of understand this, not the tick, but then the ADD and VOLD, volume difference, and the advanced decline ratios. It kind of gives you the sentiment of the market as well. So it can dictate, okay, are we getting a reversal? Are we seeing some buying activity going on? Like if you see a bullish crossover of the VOLD or the ADD, you're essentially thinking, okay, there are buyers that are stepping in, and we might see a pop here and there, or a chop here. So I really don't want to play this market and things like that. So mostly the internals are useful for me to understand and evaluate the momentum of the market. And when the internals are not really clear, that's where I'm like, I really don't get into the chop. I have these YouTube videos online too, like where I elaborated about what tick is, what VLD is, what ADD is, and I can post them out later after the spaces.
Wow, thank you. Like, I'm definitely, because market internals, that was another topic that I was interested in and wanted to get into. So, and I knew that you knew a lot of information about that. So, yeah, if you could definitely share those YouTube videos, so just for the audience members to probably get some more information on that, like that would definitely be dope. Thank you, thank you. And do we have any more questions for the audience for our guest Problem Sniper? If not, then I know that we'll just start heading out with this, and we're going to start concluding the episode 5. OG Zeus, do you have any last remarks before we start heading out?
No, I think this has been a great episode. I wish I could keep talking to Problem Sniper because I think the one thing that I really want people to get out of this spaces is the fact that this didn't happen overnight for Problem Sniper, just like it didn't happen overnight for me as well. I can just speak for myself, but it's the grind and understanding that you need to fall in love with the process of learning and growing as a trader, because there's going to be a lot of tribulations. There's going to be a lot of trials and tribulations. So it's important to not get yourself down if this is something that you really want. And just like Problem Sniper said, you need to evaluate your goals first. First and foremost, evaluate your goals to see if this is really something that you're going to want to enjoy doing the process. And so that's the one thing that I think I would really like you guys to get out of this as well. But I do have to get going here. I wish I could talk some more, Problem Sniper. I'm probably going to end up talking to you a little bit more. I really enjoyed this great conversation that we've had here on Twitter Spaces. So I hope you guys have a great Sunday, Problem Sniper. I believe it's already Monday for you. So enjoy your Monday, get some rest, and really kill the market tomorrow. All right. I'll talk to you guys later.
Thanks, man. Good seeing
Later,
you
thank
again.
you.
I'll see you later tonight.
Later.
Jeffrey, I know do you have a question for Problem Sniper?
Yeah, just quick question. Problem Sniper, you guys might have already, I kind of jumped in and out.
I think you're kind of lagging there.
Yeah.
Voice keeps going in and out.
Can you guys hear me now?
Yes, we can. No, we lost you. We'll try to. Maybe you have to reconnect and then come back in.
Can you hear me better now?
Yeah, maybe just
Is it better now?
Yes.
Okay. Do you look
Yes.
at put to call ratio and option flow? You guys might have already talked about it, but I kind of jumped in and out.
Yeah, I look at the put to call ratio, but it really does not give me as much sense unless and until the technical is technically the chart looks sound, right? So yeah, you can look at the put to call ratio, but I'm starting to look at that to understand gamma walls. But other than that, I'm not really as I mean, I'm not really paying much attention to that, to be honest. But flow, I definitely I'm always looking out for flow based on the three things that I was mentioning: technicals, flow, and then the macro. All the three have to align for me to take a swing trade. So I'm always looking out for those.
Great question, Jeffrey. Great question.
Yeah. What flow software do you use? Could you mention or?
Yeah. I have my own, I have built my own over the last 8 years, which I don't have licenses to distribute. But one thing that I've used is TradeTix, and they have been pretty consistent and very, very good to me.
Thanks for the question, Jeffrey. Appreciate you. MNS, Money Never Sleeps. Do you have a question?
Hey guys, this is a great session, by the way. So thanks for hosting ADEX. Just a quick question. In terms of setting up a journal, right, for new traders, is there any particular structure that you recommend that works for going back to our trades and understanding what it is we're really doing right or wrong? Just want your thoughts on that.
Yeah, so my trading journal evolved over time, to be honest. That's a very good question that you asked, because when I started trading and I was dating my girlfriend, now my wife, I used to have a column which said, "Did I have a fight with my girlfriend?" Because that affected my trading a lot. So based on your life events and how your things evolve over time, you can definitely change your trade journal. But right now, mine is very simple. I just have a input what is the option that I took, what is the expiry date, why did I take it, and I have 5 columns which say flow, technical, macro, sentiment, and Tradelytics has a nice bot that I kind of track on, which is called the Algo Flow. So I recently added that column in there. So I tick every column based off the confidence level that I kind of have on that trade, right? Like I see a flow, I see technicals aligning, I just have a tick on both of them, or things like that. So then what I kind of do, I just use Excel and see what kind of worked for me that week, and the next week I'm more focused on those things, those aspects of it, like the macro, or is it the flow, or is it the technicals? Are the technicals working? Like for example, about 2.5 weeks back, technicals were not really working for me. So by Wednesday, I was like, okay, you know what? Technicals are not working as good for me this week. So I'll try to focus on something else, on the flow or something like that. And it was kind of okay. Like I had a pretty good red week that about 3 to 4 weeks back. But I kind of have a journal like that. So based on how you're me and my wife are actually thinking about having a baby next year. So probably I'll just add in, is the baby crying or not? Did the baby have food or not? And based on that, things like that. And I'm not even kidding. Like these simple things affect your trading in a major way. And you have to be aware of your surroundings and prepare yourself for whatever you're trying to get.
That's awesome. No, I appreciate that answer. Thanks for sharing, man.
Great question, Money Never Sleeps. I appreciate that question. Well, with that being said, that will be the conclusion of episode 5 of the Strat Talk. Thank you, Problem Sniper, for taking your time out of your day to speak, or I should say your morning, to speak with us. We love your story. This was amazing. How can audience members reach you, or do you have any last words, or tell the people what you have going on?
Oh yeah, you can just reach me at on Twitter. I respond to almost all my DMs. I have a person like maintaining my Twitter because of some of the trolling and things like that being affecting my trading. So I don't really look at the comments, but DMs is the best way to get to me. But I do read some comments, sometimes when they post it out to me and say, "Hey, this guy needs some help" or something like that, and I kind of get onto that. But otherwise, I really don't read as much comments. But DMs, I definitely reply. So just reach out to me on Twitter, or sometimes I don't maintain any other accounts that I'm affiliated with. No, they're all maintained. So yeah.
Thank you. That's wonderful. Appreciate that. And also, thank you to my fellow co-hosts of the panel as well, OG Trades and Zeus Trades. Make sure you give them a follow as well if you haven't already. They are always giving out good information. And thank you to everyone in the audience. Thank you to those that asked questions. We appreciate you all for joining and listening in to our 5th episode of the Strat Talk. Of course, we will have this space recorded so for playback and so you can listen to it, tell your friends about it, and we're going to be having more of the Strat Talks coming in the future. For those of you that are interested in joining our Discord and learning the Strat, feel free to click the link in the bio. And good luck this week to everyone, and have a great rest of your Sunday. Thank you again, Problem Sniper, and I'll see you all later. Bye now.